In today's TAINA tips, we're going to talk about the importance of collecting the Canadian forms RC 518 and RC 519 forms for the Common Reporting Standard and FACA compliance. Sean, what do people need to know?
To comply with CRS and FACA, Canadian financial institutions must collect the RC 518 for individuals and the RC 519 for entities such as financial institutions and active or passive non-financial entities. These forms are used to determine the tax residency of account holders, so they're very important during the onboarding process. Each form requires a declaration of the individual account holder's tax residency status and for the taxpayer identification number for each of the jurisdictions in which they are resident. This information is crucial for accurate reporting to the Canadian Revenue Agency, who in turn shares this information with other relevant tax authorities abroad. What makes these forms slightly different than many other jurisdiction CRS self-certification forms is the inclusion of a U.S. declaration. This allows the Canadian FIs to more easily comply with FACA as well. Since Canada and the United States are bordering each other, there's a lot more probability of having a FACA reporting requirement for a Canadian financial institution. Any individual or entity that qualifies as a U.S. person can then elect that field on the forms rather than needing a second set of tax forms from the account holder. And equally critically, financial institutions should collect these forms during the onboarding process, which will help them identify reportable accounts. Then an ongoing monitoring for any kind of changes in circumstances will also be required so that they can then update the form as tax residencies or tax classifications change for their account holders. This is the best way to ensure compliance with Canadian CRS requirements.